Hello, and welcome to Market Brief After Hours. It's been a week where the headlines felt a bit like a geopolitical thriller mixed with a high-stakes financial drama. We saw everything from shifting rumors about the Federal Reserve's future leadership to actual troops landing in Greenland. It was volatile, it was complex, and quite frankly, Wall Street seemed a little unsure of where to stand by the closing bell.
That is the perfect way to describe it. It was a week defined by wobbles. You had these massive, contrasting forces pushing and pulling the market. On one hand, you have this incredible optimism in the technology sector, specifically regarding semiconductors. But on the other hand, you have deep anxiety about central bank independence and some very frosty diplomatic relations heating up in the Arctic.
Let's start right there with the big picture in the U.S. markets. We saw a mixed bag to close out the week. What were the headline numbers?
So the theme really was caution. The S&P 500 finished the week at 6940, rounding to the nearest whole number there. It shed just over 4 points, or a decline of 0.06%. It feels like a flat day, but the intraday action was choppy. Investors were reacting to comments suggesting a change in the frontrunners for the next Federal Reserve chair. That kind of uncertainty regarding monetary policy usually makes traders nervous, and it definitely overshadowed some of the gains we saw elsewhere.
And the Dow Jones took a harder hit than the broader market, right?
It did. The Dow Jones Industrial Average retreated 83 points, or 0.17%, to finish at 49,359. The drag here was very specific, the banking sector. We saw a 5% weekly decline in major banking institutions. The catalyst was a proposal for interest rate caps on credit cards. Obviously, that threatens revenue streams for the big banks, so they weighed heavily on the index.
That leaves the NASDAQ. Usually when there's tech news, the NASDAQ is the star of the show.
Usually, yes, and we did have good tech news, which we'll get to. But the NASDAQ composite still inched lower. It settled at 23,515, down about 14 points or 0.06%. It was a tug of war. You had positive momentum from a major US Taiwan chip deal, which is huge news, but it was offset by those broader concerns about the independence of future monetary policy. The market is basically asking, great, we have more chips, but what will interest rates look like next year?
Let's cross the Atlantic because you mentioned Greenland earlier, which isn't a typical hotspot for market news. How did Europe react to the geopolitical friction?
European bourses were definitely under pressure. The Pan-European Stoxx 600 index declined 0.1% for the week. The focus was squarely on this diplomatic standoff over Greenland. European troops actually arrived in the territory ahead of high-level talks in Denmark, which spooked investors.
It's rare that Arctic diplomacy drives equity markets. How did the individual countries fare?
It was a mixed bag. In London, the FTSE 100 actually managed to buck the trend, posting a weekly gain of 1.09%. But on the continent, things were gloomier. France's CAC 40 dropped 0.86%. In Germany, the DAX fell 0.34% to close at 25,266.
Was there any economic data helping or hurting the European situation?
There was a silver lining in Germany. Annual inflation there cooled to 1.8% in December. That offers some relief to the European Central Bank. However, Italian inflation ticked up slightly to 1.2%, so the ECB still has a complex map to navigate. But I should mention one bright spot amidst the gloom. ASML. The Dutch semiconductor firm hit a fresh 52-week high, gaining 1.6%. That ties back to the global chip demand story we're seeing in the US and Asia.
Speaking of Asia, that seems to be where the real excitement was this week.
Absolutely. While the West was worrying about the Fed and Greenland, Asia was celebrating a landmark tech deal. We saw a surge in semiconductor stocks that propelled indices to record-breaking levels. The big driver was a strategic trade pact, where Taiwanese firms committed $250 billion to U.S. manufacturing in exchange for tariff concessions.
That is a massive number.
It's huge. As a result, the Taiwan weighted index jumped 1.94%. South Korea's Kospi rose 0.9% to 4,840.74. That marked its 11th consecutive day of gains. Taiwan Semiconductor Manufacturing Co., TSMC, rose nearly 3% after announcing massive capital expenditure plans for 2026.
It sounds like the semiconductor industry is the glue holding global sentiment together right now.
It really is. Without that sector, this week would have looked much uglier. However, not everyone in Asia participated. Japan's Nikkei 225 fell 0.32%, mostly because SoftBank reversed some earlier gains. And in China, the mainland markets faced pressure,
but Hong Kong's Hang Seng managed a 2.3% weekly advance, largely due to signals from the People's Bank of China about potential rate cuts to stimulate the economy.
We are going to take a very short break. When we come back, we need to dive deep into the currency markets. There are some critical technical levels being tested, and we'll look at the specific companies that made big moves this week. Stay with us. Welcome back to Market Brief After Hours. We've covered the equities, but the currency markets were flashing some very interesting signals this week, particularly if you follow technical analysis.
The Forex markets were fascinating because they are really respecting the technical boundaries right now. Let's start with the euro against the dollar. EUR-USD finished at 1.1600, down a slight 0.07%. But the story here is the support level. The pair is currently testing the 200-day simple moving average at 1.1584.
For those who don't stare at charts all day, why is that 200-day average so important?
The 200-day average is often seen as the dividing line between a long-term uptrend and a downtrend. The fact that the euro is testing it suggests we are at a pivotal juncture. It's well below the 50-day average at 1.1654 and the 100-day at 1.1663. If it breaks decisively below that 1.1584 level, we could see losses accelerate toward 1.1500.
What about the British pound?
GBP USD is in a state of intense consolidation. It closed at 1.3381. It's essentially wedged between two major moving averages. You have the 100-day average acting as support at 1.3366 and the 200-day average acting as a ceiling at 1.3402. It's a very tight range. Traders are waiting for a catalyst to break it out of that wedge. A close below the 50-day average at 1.3322 would signal bearish pressure is intensifying.
And looking north of the border, the Canadian dollar had a bit of a rough session against the greenback, or rather, the US dollar strengthened.
Exactly. The USD CAD pair had a very strong day, reclaiming key levels. It ended at 1.3915, gaining 0.21%. This was a robust bullish move. It breached both the 50-day and 100-day moving averages, and crucially, returned above the 200-day average at 1.3837. This signals a sharp improvement in sentiment for the US dollar against the loonie. The next major target is the psychological barrier at 1.4000.
And finally, regarding currencies, the yen, it's been on a wild ride recently.
It has. USD JPY paused its rapid ascent, closing at 158.09, down 0.34%. But don't let the drop fool you. The uptrend is still very powerful. It's trading comfortably above the 50-day average at 156.12. This pullback is viewed as a standard consolidation after aggressive buying. As long as it holds above 157.00, the bias remains firmly to the upside.
Before we get to the individual stock movers, we have to touch on commodities. Gold and silver saw some drama?
Drama is the right word. Gold rejected record highs. It settled at $4,582, falling 0.73%. It hit an intraday record and then saw a wave of profit-taking. However, it's still trading significantly above its 50-day moving average of $4,283, so the bullish posture is intact. Silver, on the other hand, faced a sharper correction. It plunged 3.32% to close at $89.32. It's pulling back from vertical gains, but like gold, it remains well above its long-term averages.
Okay, let's wrap up with the market movers. These are the individual stocks that made headlines. What was the biggest winner?
The standout was definitely ImmunityBio. The stock rocketed 40%. This was driven by optimistic projections for their bladder cancer treatment. They are expecting revenue to grow by a staggering 700%. That is the kind of guidance investors love to hear.
And we saw some movement in the defense sector as well.
Yes, AST SpaceMobile gained 15%. They were selected as a primary contractor for a major U.S. missile defense program. Given the geopolitical tensions we discussed earlier, defense contracts are being watched very closely.
What about the pharmaceutical giants?
Novo Nordisk jumped 9%. This is all about the weight loss drug market. Early data showed strong initial adoption of the oral version of their popular treatment. Moving from injections to pills is a game changer for accessibility, and the market priced that in immediately.
And in the tech space?
Micron technology rallied 7%. This wasn't a product announcement, but a confidence signal. A board member disclosed a multi-million-dollar stock purchase at market prices. When insiders buy that heavily, the market takes notice.
And finally, who had a tough week?
Amcor struggled. The packaging company saw shares drop 7% after completing a 1-for-5 reverse stock split. Reverse splits are rarely received well by the market, as they often signal management is trying to prop up the share price artificially, and investors sold off on the news.
So as we look ahead to next week, what should we be watching?
The focus will remain on the Federal Reserve. We need clarity on the leadership transition. Until that is settled, expect this wobble to continue. Also, keep an eye on those European diplomatic talks regarding Greenland. If that escalates, it could spill over into broader market sentiment. And of course, inflation data will determine if the ECB and other central banks can afford to be dovish.
It sounds like another busy week ahead. We will be here to break it all down. If you find this useful, please follow Market Brief After Hours. Thanks for listening.